Okay, good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Friday, May 18th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can also find me on Twitter. I am at DanRusso_CMT. As always, PowerFeed TV is brought to you by Chaikin Analytics. You can get your daily free Chaikin Power Feed at www.chaikinanalytics.com/Power Feed TV. So let's dive right in. Yesterday's activity, U.S. equities were mostly lower in Thursday's trading, but the Russell 2000 small caps extended its all-time high while the Dow fell back into the red for the year. Bond proxies and technology were the biggest laggards, while energy was the best performer. Treasuries were mixed with some curve steepening. That should help the financials. The dollar was stronger against the yen, slightly better against the euro. Gold finished down about 20 basis points, and it's on track for a big weekly sell-off. WTI crude finished little changed. Breadth on the New York Stock Exchange was positive 1.2 to 1, while breadth on the NASDAQ was positive 1.5 to 1. So as always, let's kind of dive right in, look at the key levels that we're watching. And, while we're chopping around and the market remains in a consolidation in the context of a secular uptrend, a lot of the key levels that we're watching remain in place. We see support at 2710. That was former resistance. And then we have a zone of support in the 2658 to 2675 level. That was resistance before we broke out last week. Expect that to be support, and then we have the rising 200-day moving average at 2626. On the upside, you can see this week we're struggling with the 2741 level. As you know, 2741 is the level I am watching very closely, because if we get through there, it gives me conviction that the secular uptrend is in fact resuming. Next, we'll see some round number resistance around 2800, which is the March highs. So we'll continue to keep an eye on these key levels. Market is kind of respecting this zone that we're in right now. We've kind of been chopping around all week long. So moving over now to your market in a minute, we have small caps mostly lower, but stocks mostly lower, but small caps advance again. Trade tensions are beginning to resurface, and that to me is one of the key points to the thesis of small cap outperformance are these trade concerns. Bond proxies continue to underperform. That's as rates move higher. I continue to maintain a bearish view on real estate and utilities. High yield bonds break out relative to treasuries. That is kind of an under the radar indicator that I look at that gives me a clue that the market is likely to resolve to the upside. It's a sign of risk-taking in the market, and futures point to a higher opening here today. So checking in with the Chaikin power bars, we did see some deterioration in the Dow. Again, the power bars tell us how many stocks in each major index have a very bullish or bullish rating, how many have a neutral rating, and how many have a very bearish or very bearish rating in Chaikin Analytics on our platform on how we rank stocks. S&P 500 relatively flat from yesterday, still skewed to the negative side. NASDAQ kind of evenly matched, 13 bulls for 14 bears. Small cap outperformance continuing to drive the power bars to a more bullish ratio. That it remains the key theme in the market. 532 very bullish or bullish stocks for 300 bearish or very bearish stocks. Bonds ticked lower. Yields continue to remain above 3%, closer to 3.1% for the 10-year. And then energy continues to be a major outperforming sector, up 1.5% yesterday. 11 bullish or very bullish stocks for 3 bearish or very bearish stocks. So according to the power bar, small cap stocks have become more bullish than large cap stocks. Major indexes continue to be mixed, hence the choppy trading that we have seen and continue to see. Our stock of the day, Integer Holdings, as a Chaikin Analytics subscriber, rather a PowerFeed subscriber, you'll receive a stock every day that we're keeping an eye on. And today's stock is ITGR. Closed at 66.85 yesterday, up 45 basis points. It has a very bullish power gauge rating due to a very attractive financial metrics, very strong earnings performance, very strong price and volume activity, and very positive expert activity. Essentially, all 4 of our main factors are pushed to very bullish levels. And you can see the performance in the stock. I mean, the stock ripped higher following an earnings miss, and it's kind of consolidating here, maybe forming a little bit of a flag pattern. But we want to maybe keep an eye here. It is overbought. We want to add this to a bullish watch list. Let's kind of analyze the chart further. Very bullish power gauge rating. We have a strong trending stock in a strong industry, so we're kind of barking up the right tree in terms of looking for long ideas. Moving to the bottom of the chart now, here's our ribbon. Tells us where the power gauge has been over the course of the past 12 months, and we can see it's been bullish or very bullish since mid-February timeframe, mid to late February. Market in agreement with our model as the stock is outperforming relative to the SPY. So our dynamic duo is in place, outperformance on a bullish or very bullish stock. So now we just want to check it out tactically. We can see that the stock is overbought based on our overbought, oversold indicator. Money flow has kind of been mixed since September. However, it is slightly bullish for the time being. We'd like to maybe see an accumulation here. Big gap up following earnings could be a sign of short covering. We want to see institutions start to come into the stock. So what I'm looking for here with ITGR Integer Holdings in the medical products group, which has been strong, is I'm looking for some flat line or maybe a consolidation back down to the $62.5, $63 level. Let this indicator work off the overbought condition. And as long as the stock remains with a very bullish rating and continues to outperform the market, that likely sets up a compelling entry point. So ITGR going on to my bullish watch list today. I'm going to keep an eye on this one going forward. Think it could be interesting. Just think it's a little bit ahead of itself for the time being. Our sector tracker, again, something that PowerFeed subscribers will receive every day. Sector movement over the last 5 days. We just kind of want to see where the money is flowing throughout the market. It's great to look at the major indexes, but there's an old saying, if you trade the averages, you'll get average performance. We like to drill down. Let's look at the sector level. Let's look at the industry level. So we can see energy's been outperforming. No surprise given the strength in oil, but up 2.7% over the last 5 days. That is a strong move. What we don't like to see is technology underperforming. Technology, largest weight in the S&P 500 at 26% of the index. Cisco's report yesterday kind of weighed on the tech sector. We want to see technology as leadership to give us a lot of conviction that the bull market is going to resume. As we said, and as I've been talking about all week, basically pounding the table that real estate and utilities are set up for bearish trades. For those inclined to short stocks, these are the groups where you want to go hunting for short ideas. I do think that I think that yields are going to continue to rise. Bonds are going to continue to see price weakness. I don't think that that is a major negative for the equity market, but it is a negative for the bond proxies, utilities, and real estate. Likely going to continue to underperform the market. Definitely want to be underweight those names. Definitely want to short names in that group if that's the type of trader that you are. Look at real estate here, down 3.6% over the past 5 days. This has been a table pounder for us on the short side. Our industry in focus today, transportation services, and this one sets up bullishly. The power bars are skewed more than 3 to 1 to the bullish side. 13 very bullish or bullish stocks for 4 bearish or very bearish stocks. Over the past 6 months, this subsector has outperformed the S&P 500 by 3.4%. Power bar ratio, which measures future potential, as I said, is very strong with more bullish than bearish stocks. Currently ranked number 7 out of 21 subsectors. It's actually moved up 3 slots over the past week. So it's in the top third of the subsectors that we look at. If you're looking for long ideas, transportation services is a group where you want to be looking. Some of the indicative names there: ArcBest, ARCB, Hub Group, HUBG, and Schneider National SNDR. Let's kind of rip into one of these a little bit further, kind of give you a sense of how I look at stocks and come up with single stock ideas for Chaikin Analytics subscribers. Hub Group, HUBG, closed at 47.20 last night, up 20 cents, up 43 basis points on the day. As we said, it has a very bullish Chaikin power gauge rating, has a strong trend in a strong industry. So fishing in the right pond, as I like to say. Again, moving to the bottom of the chart, power bar over the past year. Notice through much of a year ago, the stock was neutral, some flecks of positive activity, and really just been neutral. So this is new strength that we're seeing recently, the very bullish rating. But what gives us conviction, as always, is when the market is in agreement with our model, and we can see back in early May, the stock began to outperform relative to the SPY. So our dynamic duo is in gear. outperforming the market with a bullish or very bullish power gauge rating. So we know that this is a stock that we want to continue to do work on and watch on the long side. Checking it out if it's set up for a tactical entry right now. We are slightly overbought. Money flow is bullish, indicating that institutions are buying the stock. And over the past 12 months, we can see that the bullish intensity of Chaikin money flow has been much greater than the bearish intensity has been when the stock has come under distribution. So we want to see strong bullish intensity to give us an indication that the institutional investors are accumulating the stock. We can see the stock made a high with the market at the beginning of the year in the January timeframe, pulled back, beginning to break higher now. Kind of took out a resistance level at $46, trading above the long-term trend line. That's the orange line here, which is beginning to curl higher. To me, above $45, you want to be long this stock. Maybe we could go sideways here a little bit, work off this overbought condition, but Hub Group is a name that bullish investors want to add to their portfolios. Above the $45 level, I think you have upside to the highs at $52. So you risk $220 to make, $480. I like that trade. I like that risk reward. That looks compelling to me. You can see the past 3 quarters of earnings have all been positive surprises. So the fundamentals are trending in the right direction as well. Hub Group, worth a look on the long side, in my opinion. Ticker symbol HUBG in the transportation industry. So as I said, I'm very bullish on small caps. I think the theme continues to play out, small caps outperforming large caps. But as I said as well, we like to take it a step further. And one of the trends that I see emerging within the small cap outperformance of large cap is in the small cap value space. Here's the ETF IJS. It's the iShares Small Cap 600 ETF. And you can see a fresh breakout over the 160 level yesterday, following through there through 160. Been outperforming the SPY since April. It is slightly overbought here in the near term, so maybe we consolidate, maybe we form a flag above the 160 level. Money flow turned positive before the breakout, so investors are obviously coming to the names in this ETF. IJS really does look compelling to me as a sub-theme within the theme of small cap outperformance. We want to maybe keep an eye on the value names. Value stocks tend to give you a margin of safety from a fundamental standpoint. So for ETF investors, I like adding IJS to the portfolio here as long as it remains above $160 and above this rising long-term trend line. IJS looks bullish to me. Thematically, small cap value looks bullish. So maybe let's take a look at a small cap value name. Umpqua Holdings does play on a couple of themes. Plays on a small cap theme, plays on the small cap value theme, also plays on the theme of financials. As rates move higher, financials have been strong. Yield curve steepened, as I said. Wouldn't be surprised to see some small cap financials names doing well, and that's exactly what we have here. For reference, Umpqua has a very bullish power gauge rating in Chaikin Analytics. We can see here the stock has broken through the $23 resistance level. As long as we remain above that, I think the path of least resistance is going to continue to be higher. The stock can trend up from here. The RSI is in bullish ranges. Kind of got overbought with a thrust move higher late April. Working off that condition here, not as overbought, but I think as long as the RSI remains above the 40 to 50 level, that to me means that the momentum indicator is in bullish ranges. And the stock likely will continue to work higher. Also encouraging is volume has been stronger on the advances than it has been on the declines. Actually seeing volume decline here as the stock consolidates. UMPQ also has a bullish Chaikin money flow reading. This name has all of the hallmarks of something you want to have in the portfolio. UMPQ. Above the rising trend lines as well. 50-day moving average, 200-day moving average. Everything seems to be in gear for this stock. I think as long as we maintain the breakout level of $23, you want to be long this stock. HYG, here's high yield outperforming treasuries. That is a sign of risk taking in the market. That gives me conviction that we could work higher. Taking a look at the power bars, energy, financials, and healthcare are your 3 leading sectors. So wrapping it up, you can get your powerful, profitable stock ideas and more every day from PowerFeed at Chaikin Analytics. Have a good day, everyone. Happy Friday. Have a great weekend.